How would you feel if you watched a massive household name asset get dragged into a grueling falling trend, flashing heavy sell signals across almost every single technical chart, while a small group of highly passionate traders insisted it is completely undervalued? Welcome to the wild, fast-paced world of tokenized assets, where legacy global enterprises and decentralized blockchain technology collide. Today we are looking closely at Nokia Tokenized Stock, trading under the ticker symbol RNOK, currently ranked around number 1775 in the broader digital asset space. Right now it is sitting at $12.03, pushing a 24-hour increase of about 5.1%. But do not let that single green day fool you. Behind this small daily bounce lies a massive macro debate dividing the community. Is this a rare deep value buying opportunity in a legacy giant? Or are we looking at a classic bull trap designed to catch retail investors completely off guard? Before we unpack the technical charts, the order books and the fundamental data, make sure to hit that like button, subscribe to the channel right now, and turn on notifications so you never miss an urgent update on these high volatility moves. Also, it is absolutely compulsory today to leave your comment below. Tell me, do you think RNOK is a hidden tech gem or a sinking ship? Seriously, leave a comment right now because the algorithm needs to see where the community stands on this asset. Remember, absolutely nothing in this video is financial advice. We are analyzing the market trends, the sentiment and the pure data to see how this plays out. Let us get straight into what is actually going on here. To understand why this tokenized stock is suddenly in focus, we have to look at what the underlying company actually does. Nokia is a global powerhouse in telecommunications, 5G mobile network infrastructure, and advanced cloud network hardware. They build the literal backbone of modern global connectivity, managing massive enterprise networks, and holding a massive portfolio of critical technology patents. The underlying stock, Nokia, has experienced intense market focus due to the global rollout of next-generation infrastructure, major defense contracts, and shifting telecom spending. Because of that global relevance, entities tokenize the stock to allow crypto traders to gain exposure to its price movements 24 hours a day, 7 days a week on the blockchain. But recently, things have taken a sharp turn. The initial market euphoria has cooled off, and the market is forcing investors to face reality. The asset has faced a rough patch, and that is exactly why the crypto version, RNOK, is experiencing a tense tug-of-war between buyers and sellers. Let us dive deep into the technical analysis because the charts are telling a very fascinating, almost contradictory story. If you look at the medium to long-term trend, the underlying asset has historically been locked in a downward channel, which originally signaled strong institutional pessimism. But when you zoom into the short-term picture, the momentum tells a completely different story. The Relative Strength Index, or RSI, dipped heavily, flashing strongly negative momentum before the sudden daily bounce. This means that in the short term, sellers have been aggressively driving the price down, showing increasing pessimism. Right now, the asset is trapped between a key psychological support level at $11.50 and a major resistance ceiling around $13.50. High volume historically came in at the price stops, but the recent sell-off has left a lot of traders holding bags at much higher levels. A definitive break below $11.50 could trigger a massive cascade of stop losses, while a break above $13.50 is required to prove that this daily 5% pump has actual legs. Right now, the short-term weakness is battling long-term structure, leaving day traders on absolute high alert. This brings us to the ratings and the technical signals which are causing a lot of anxiety in the trading forums. While some traditional Wall Street analysts hold long-term hold or mild buy ratings based on the company's massive patent portfolio, the immediate technical indicators are flashing sell and strong sell signals across multiple timeframes. Prominent institutional firms recently downgraded their stance, citing severe valuation concerns and a global slowdown in telecom capital expenditures. Furthermore, the company has faced significant fundamental hurdles, including missing revenue expectations for multiple consecutive quarters and dealing with compressed margins due to intense global competition. When you combine negative technical momentum, short-term sell signals, and institutional downgrades, it creates a massive cloud of negative sentiment over the short-term outlook. So, is this asset genuinely undervalued, or is it a dangerous value trap? The answer depends entirely on which side of the order book you look at. The crowd calling it undervalued points to the massive global footprint, a massive backlog of enterprise contracts, and the fact that 5G and 6G infrastructure is expanding rapidly. They believe the current pullback toward $12 is a gift, a natural market correction that lets smart money accumulate shares at a massive discount before the next big macro leg up. On the flip side, the bears argue that this is a textbook value trap. They point out that retail traders often get trapped in these assets because they only look at the historical high prices and assume a dip means it is cheap. They forget that slow cyclical growth, intense execution risks, and persistent net income pressures can keep a stock depressed for a very long time. Retail traders buy the dip expecting a quick recovery, only to watch the support level crumble beneath them. Let us break down the exact risk you are facing if you trade this asset. The first major risk is extreme volatility. Tokenized stocks often trade with different liquidity profiles than traditional equity markets, meaning price swings can be much sharper and faster, especially during off-market hours when traditional stock exchanges are closed. The second risk is the cyclical nature of tech infrastructure spending. If telecom operators slow down their network build-outs, Nokia's revenue faces downward pressure. This is precisely why retail traders get trapped. They chase the hype of global 5G technology and massive infrastructure contracts, without realizing that corporate spending cycles can drag the price down regardless of how essential the underlying technology sounds. To weigh this properly, we need to look at both the bull case and the bear case. The best case recovery scenario, the bull case relies on a few major things going right. First, the asset must firmly hold the 1150 support level and consolidate. Next, the underlying company needs to report a massive surge in enterprise network orders, clearing up growth worries. If they report a surprise positive earnings beat, or if a massive industry event ignites the telecom sector again, RNOK could easily break through the 1350 resistance and target the $15 to $17 range, rewarding patient buyers with massive gains. Conversely, the worst case continuation scenario, the bear case, is quite grim. If the short-term negative momentum continues to dominate, the 1150 support will shatter. A break below 1150 opens the door to a rapid drop toward the next major technical support levels, potentially dragging the price down into single digits, somewhere around the $9 to $10 mark. If the company continues to miss earnings or faces contract delays, the institutional sell signals will intensify, and the short-term downward trend will simply continue lower, leaving late buyers with heavy long-term losses. Looking at the outlook, there is a massive disconnect between the short term and the long term. In the short term, the perspective is highly cautious, if not outright bearish. The technical indicators, the telecom spending slowdown, and the recent downgrade suggest that the asset could face continued downward pressure or painful sideways grinding before it finds a true bottom. The short-term trend is firmly in the hands of the bears until proven otherwise. However, the long-term perspective offers a glimmer of hope for the patient investor. If you believe that global network infrastructure is a foundational industry and that this company will dominate its niche over the next decade, then the current short-term weakness is just noise on a long-term chart. But surviving that short-term noise requires a stomach for massive risk and high volatility. This brings us to a massive point of uncertainty. The market is standing at a critical crossroads, and no one can say with absolute certainty which path RNOK will take. The daily 5% bounce shows that buyers are trying to fight back, but the overwhelming technical sell signals suggest the downward pressure is far from over. Are we witnessing the final capitulation of weak hands right before a massive institutional reversal? Or is this minor bounce just the quiet pause before another devastating leg down that flushes out the remaining retail buyers? The charts are locked in a tense standoff, the data is conflicting, and the next major move will catch a lot of people off guard. What do you think will happen when the market opens up tomorrow? Will the 1150 floor hold, or are we about to watch it collapse?